Today we are going to do the income statement. So we are told the following information was taken from the accounting records of MK Traders, a business owned by from Cricket Makaya Dean. The last day of the financial year is dated June 2022. Okay. So you know that in the income statement, the first thing that you must do before doing many things, you take the money for the sales, you subtract it with the one for the debtors allowances. So we are given the sales, they are 1,032,000. So it's already written this side on the answer box. We just have to subtract the debtors allowance, which is 32,000. So minus 32,000, right? And then let's go to the transactions. Let's go to the transactions. Transactions 2.1. Packing material of 500 Rand purchased on 21 August was incorrectly posted to the stationery account. So here we are talking about the expenses. We're talking about the packing material and the stationery. So their balances, they are already written. So what are they saying? They are saying that we bought a packing material, but it was recorded in a stationery account. So when we bought a packing material, we were supposed to go and increase the packing material. So let's go and increase it because we made an error and then we recorded this in the stationery. So they said that this was incorrectly posted to the stationery account. So let's go to the stationery and subtract the 500 Rand because that 500 Rand, it is for the packing material. We were not supposed to increase the stationery because we were buying the packing material. And it's when you are buying the packing material is supposed to increase. But then we recorded this in a stationery account. Okay, number 2.2, a credit note for 225 issued. So meaning that a debtor is retaining the goods. On 30 August 2021 to Tendek has not been recorded. So it was not recorded, right? The stock was returned by Tendek because the wrong color t-shirt was sent to him. The markup on cost for these goods was 50%. Okay, now, so what is happening is this. When a debtor is retaining the goods, 4 accounts are affected. When a debtor is retaining the goods, 4 accounts are affected. The first account is the debtors control. And then another one is the debtors allowance. Now, when a debtor retains the goods, what is going to happen to the money that a debtor is owing us? It is going to decrease. So meaning that the debtors control must decrease. It must decrease by how much? By 225. Now, what is going to happen to the debtors allowances? So the debtors allowances, remember, in the debtors allowances, we record everything that has been returned by our debtors on it. So we must come and increase our debtors allowances because the people that are retaining the cost, they are increasing. And then, so remember, I said 4 accounts are affected. Remember, a debtor is retaining a trading stock, so therefore a trading stock is increasing. What else is affected? It is the cost of sales. Cost of sales, right? A debtor retained the goods. what is going to happen to the trading stock? The trading stock of the business is going to increase because a debtor is retaining the goods. Now, but we are not giving the money for the trading stock. How do we calculate it? So we're going to say cost price plus markup is equal to selling price. So the cost price is always 100%. And then the markup here is given is 50%. So cost price plus markup is 150. Then, so we are given that it is 225 times. So what I do is this. Below you put what we have. So what we have is a selling price of 225. So we know that the selling price, according to this, it is 150. And then above we put what we want. So what we want is a cost price, which is 100. So that is going to give you 150. So when a debtor returns a goods, we said the trading stock is supposed to increase. So let's come and increase the trading stock. Remember, the trading stock increases on the debit side. And then we know that if you record something on the debit side, it must also be recorded on the credit side. So the cost of sales is decreasing because the cost of goods being sold is decreasing. So let's go. The first one must go and decrease the debtors control. So we must go and decrease them by 225. And then we must also increase the trading stock by 150. And then now the left one is the debtors allowances. We know that the debtors allowances decreases the sales. So let's go and decrease the sales. Debtors allowances decreases the sales. So let's go and decrease the sales. And then we also said that the cost of sales is decreasing by 150, right? So let me just erase this. Let me just erase this. Let me just erase this. Okay, let's continue. 2.3. Included in the insurance amount is an annual premium of 2,400 paid for the period of 1 January 2022 to 31 December 2022. Now, our financial year ends when? Our financial year ends on 30 June 2022. So meaning that our financial year starts on 1 July 2021 and ends on 30 June 2022. Okay. So there we're talking about the insurance. Let's look at the insurance. The insurance is 6,400. Insurance 6,400. So what are they saying about it? They are saying that included in the insurance amount is an annual premium of 2,400 paid for the period. So we paid for the period of 1 January 2022 to 31 December 2022. But if you can look, 31 December is not in our financial year. 31 December is not in our financial year. So here we pay for the period of the whole 12 months. But if you can look, some of the months that are here, they don't belong in our financial year because our financial year ends on 30 June 2022. So this means that from 1 July 2022 to 31 December 2022 for this insurance, these months that we paid, they are not for our financial year. So we have 6 months that are not for our financial year, right? So what this means? This means that half of the insurance is for this year then also half of the insurance is for the next financial year. Okay, let's just do it this way. So we're just going to say 2,400 times. So we want the money that has been prepaid, because here we paid for the next financial year. So how many months are prepaid? It is for 6 months. Then this insurance of 2,400, it is an annual premium. When we are talking about annual, we are talking about the whole year, the whole 12 months. So it's 6 over 12, which is going to give you 1,200. So that is a prepaid. So you must go and subtract it. Or what you can do here, if you don't understand this one, you can do it this way. Okay, you can just say 2,400 divided by, because we are told that this insurance is from a period of 1 January 2022 to 31 December 2022, which is 12 months. Now you want to know that how much is the insurance per month. You divide by 12. So 2,400 divided by 12 is 200. Right? Then you know that we have 6 months that are prepaid from 1 July 2022 to 31 December 2022. So that is a prepaid expense. So 6 times 200, that is 1,200. So which is a prepaid expense that you must separate here in the insurance, because it does not belong in our financial year. So let's continue. 2.4. According to the physical stock count, the following were on hand at the end of the year. Trading stock is 79,000. Now let's check. Did we make a trading stock deficit or surplus? If you can look, 81,000 plus 150, we made a trading stock deficit, because we were expecting 81,150, but we got 79,100. So it's a trading stock deficit. So we were trading stock deficit. So it's 81,000 plus 150, the returned one, minus 79,100. Then they said packing material on hand is 900. So here on the income statement, for the consumable stores, packing material and stationery, we only want the ones that have been used. We only want the used one. Here on the income statement, we want the consumable stores, stationery, and packing material, the used ones. So what you need to do is this. You take the money at right balance, then you subtract it with the one that is in the adjustment, the one on hand. Then you are going to find the used one, because this one on hand is the remaining one, right? This one on hand is a remaining one. Like currently, like right now, the packing material is 4,700, but then the remaining one is 900. The packing material is 4,700, and they're saying now the remaining one is 900. So this means that they use a packing material is how much? Is the difference of these two. 4,200 plus 500 minus 900, that is 3,800. This means that the packing material that was used this year is 3,800. And then they said rent income includes rent received until 31 July 2022 So meaning that we have 1 month in advance because our year ends on 30 June. The monthly rent was increased by 10% with effect from 28 February 2022. Okay. So what you are going to do is this. So this means that at the beginning of the year, the year starts on 1 July 2021. From at the beginning of the year till 28 February 2022, because the rent was increased by 10% at the end of February, meaning that the rent for February does not have the 10%. So meaning that from 1 July 2022 to 28 February, from 1 July 2021 to 28 February 2022, the rent here it was 100%, which is how many months? This is 8 months. So you see times 8 months is equal to 800. And then from 1 March 2022 to 31, because they are saying the rent was received till 31 July. 31 July 2022. The rent now, it was now increased by 10%, meaning that now the rent was 110%. So 110 from 1 March to 31 July, that is 5 months. So this is 550, right? So 800 plus 550 is equal to 1,350. So this is a total percentage that was received for the rent, right? So now let's go and check in the trial balance. How much is the rent? The rent is 47,250. 47,250. Okay. So 47,250 times. So what I usually do is this. Below you put what you have, right? So what we have is the rent, right? And the total percentage of the total percentage received for this rent is 1,350. And then I said above you put what you have, like always above you. Above you put what you want. Below you put what you have, above you put what you want. So what I want is the rent that has been received in advance, which is the rent of July. And the rent of July is including the 10%, meaning that the rent of July is 110%. So if you times them, they're going to give you 3,850, which is the rent of July that must be subtracted. Right? Then let me erase this. Okay, then 2.6. The loan statement received from IECC showed the following. The balance on 1 July 2021, it was 42,000. Then they said the balance at the end, it is, because this one is a balance at the beginning of the year on 1 July 2021. Then this one is a balance at the end of the year on 30 June 2022. So if you can look, this loan decreased by 2,875. it was 42,875. It decreased to 40,000. But then here they said that repayments for the year is 10,000. Then they said that interest capitalized for the year, meaning that the interest is capitalized. So if the interest is capitalized, it means that the payments that the business is making for the loan, they include an interest. The payments that the business is making, they include an interest when the interest is capitalized. So now, but we now we know that the loan decreased by 2,875. So this means that to find the interest, we're going to say 10,000 minus 2,875 is equal to 7,125. This is the interest because they said the repayments for the year is 10,000, but then now we already know that the loan decreased by 2,875, meaning that the loan was paid uh, by 2,875, meaning that the other payment is for the interest. Okay, now we know the interest on loan, interest expense. So do we have an interest expense in the trial balance? Oh, we have an interest on overdraft. It is 360. 360, then plus the interest on loan of 7,125. And then David Warner, a debtor whose account had been previously written off, deposited. So this one is a bad debt recovered. They are saying a debtor who had been previously written off has paid. Right? So how much is your bad debt recovered? How much is the bad debt recovered? The bad debt recovered is 1,000 rand. Bad debt recovered is 1,000 rand. Maybe bad debts recovered is 1,000 rand. Now let's go and see what are they saying about it there. They are saying that David Warner, a debtor whose account had been previously written off, deposited an amount of 210 in the bank account of the business on 25 August 2021. The bookkeeper entered the amount in the debtors column in the CRG by mistake and posted as such. Correct the error. So the way we are going to correct the error, we are going to open two accounts. It's a debtors control and a bad debt recovered. The reason we are opening the debtors control, it is because debtors control was not affected. So therefore, the bookkeeper was not supposed to enter this in the debtors control account. So we must correct this error, right? So what happened here now? It was as if this debtor, David Werner, is paying us. So meaning that they decrease the debtors control with a 210, while this was no longer our debt. This was no longer our debt. So they were not supposed to decrease the debtors control. The account that was affected, it was the bad debt. So now what we're going to do, we need to come and increase the debtors control. The reason we're increasing the debtors control, it is because this 210, it was recorded in the debtors control as if a debtor is paying us, while in our books, this is no longer our debtor because he was previously written off. So this was supposed to be recorded in the bad debt recovered. So we know that the bad debt recovered, It's an income, so the income increase on the credit side. So we go and increase our bad debt recovered by 210. And then also we must go and increase our debtors control by 210. The following information from the salaries journal for June 2022 has not yet been entered in the books of the business. If you can remember, when we were doing the salaries journal, the money that goes to the salaries is the gross salary. The money that goes to the salaries is the gross salary. Now, how do you get the gross salary? To get the gross salary, you say net salary plus deductions. To get the gross salary, you say net salary plus deductions. So meaning that these deductions, they are included in this gross salary of 30,000. So let's go and increase our salaries because this was not recorded. They said that this was not recorded. So how much is our salaries? The salaries is 125,000 in a trial balance plus 30,000, right? And then we also have the contributions. Remember the contributions, they are made by the business. So it's an expense to the business. So we have the contributions for medical aid. So let's check first how much is the medical aid in a trial balance. The medical aid is 3,000. Medical aid is 3,000. Then UIF and skills development levy, they are 1,250. 1,250. 1,250. Okay. And then now we are here. So we have the contributions, which are an expense to the business. So we have the medical aid contribution, which is 2,600. So we must go and add it. And then we also have the UIF and SDL, they are the same, both of them, they are 300 rand. So let's go and add them. And then they said the account of gives a data for 450 must be written off as it came to light that he has left the country to play a cricket in Japan. So how much is our bad debt? The bad debt is 1,500. So now we are writing off a debtor who has left to play a cricket for how much? For 450. So this is why you are now adding this 450 to the bad debt. So now we know that this is going to decrease the debtors control. So let's go and decrease the debtors control because this is no longer our data. We are writing this data off. So if we are writing a data off, it means that the debtors control is decreasing. And then they said 2.10, the provision for bad debt must be decreased by 200. For the case of the provision, just that here they did not give us a percentage. But for the provision, what you should know is this. If the provision for bad debt, the one on the, okay, if the provision for bad debt increased, so meaning that if the one on the adjustment is bigger than the one on the trial balance. That difference, we regard it as an expense. Now, if the provision for bad debt decreased, then that one we regard it as an income. That difference, we regard it as an income. So here we were not told to calculate it, we are just told that it decreased by 200. So the provision for bad debt decreased by 200. So this is an income. Remember, I said the provision for bad debts, you calculate it using the debtors control balance. So in this case, the amount that we are going to use to calculate the provision for bad debts, if you are given the percentage, because here they have already calculated for you. But if you are given the percentage, you were not going to use this balance of 53,000. You were going to use the balance that you are going to get after you set 52,000 minus 225 plus 210 minus 450. So that is the balance that you are going to use to calculate the provision for bad debt. Okay, and then 2.11, some of the interest on the fixed deposit is still outstanding. How much is the interest on fixed deposit? Interest on fixed deposit is 500 Rand. Let's go and record it. So we have the interest income, interest on fixed deposits and income. So it's 500. So they are saying that it is still outstanding. So now let's come and do the calculation for the interest. So the fixed deposit is 12,500 times 8%, which is equal to 1,000 Rand. So actually the interest on fixed deposit, it was supposed to be 1,000 Rand, not 500 Rand, meaning that the outstanding amount is 500. The outstanding amount is 500. And then they said, water and electricity account for August 2022 has been received but not paid. So this is an accrued expense. It's an expense that the business has created, but then it is not yet paid. So it's an accrued expense for water and electricity. So how much is the water and electricity? That is 25,000. So 25,000. Then the transaction accrued expense of 5,000 plus 5,000. And then we have a depreciation calculated for the year is 27,470. Depreciation is 27,470. This is a depreciation. Right? So now we just have to do the calculations. Okay, sales, if you separate all this, you're going to get 999,775. Then the cost of sales, you're going to get 426,850. So to get the gross profit, you say sales minus cost of sales, which is 572,925. Right? Rent income, this is going to give you 43,400, and then the bad debt recovered, it is 1,210. So if you add all this, they are going to give you 49,010. So if you say gross profit plus operating incomes, they are going to give you the gross operating incomes, which is 621,935. Then salaries and wages, let's add 255,000. This one is 30,000. This one 1,200. This one stationary. Stationary is 2,600. The bad debt, it is 1,950. Medical aid 5,600. And then this is 1,550. 1,550. Then the bank charges there in the trial balance they were given, they are 840. Then if you add all this and then you separate, you are going to get trading stock deficit of 2,050. So if you are going to add all these amounts, you are going to get the operating expenses, which is 281,110. So to get the operating profit, you say gross operating income minus operating expenses, then you get the operating profit, which is going to be 340,825. So to get the profit before interest expense, say operating profit plus interest income, so it's going to be 241,825. Then if you add these two interest expense, you're going to get 7,485. So we know that you must subtract the expense, so which is going to give you the net profit of the year. Net profit of the year. Thank you so much. Please subscribe.